Hi guys, this is IB Business Management Made Easy. I'm Sam Foxwell, and today we're going to be looking at the basic accounting stuff that you find in business management. So that includes contribution, break-even stuff, and profit. So I hope the video helps you, but if you need more personalized help, you can contact me by WhatsApping on the number here, or fill out the form in the link, and I'll contact you later. Hope this video helps. Before we get into the basics of accounting, I want to take a look at this company here because this is what we're going to be basing the lesson on. Sam's Bakery sells only one type of cake at $10 each. So the price, P, is $10. Now obviously you sell a cake, it's not $10 profit because you have to pay stuff, right? And the stuff you pay comes in two different types: fixed cost and variable cost. Fixed costs are the things that normally don't change. You pay the same thing every month. So rent, $400, you have a janitor you're paying $100 to, and a cashier another $100. So total fixed cost is $600 per month. And then over here you have the variable costs. These are directly related to the cakes you're making. So if you make 0 cakes, you have no cost. If you make 1 cake, well, your variable cost is $4 because you have to pay for these things here: flour, eggs, sugar, milk, pay the baker $1. $4 for 1 cake. Then if you make 10 cakes, well, you'd be paying $40. So this is the variable cost. It varies, and that's that. Let's take a look at the first thing, which is contribution per unit. Contribution per unit is kind of simple. It's just how much of a sale contributes to the fixed costs. You know, those costs right here, these ones. So, and you calculate it like this. Contribution per unit is the price per unit minus variable cost. So remember that the price of a cake is $10 and the variable cost is $4, so $6. So if you sell a cake, $4 goes towards paying the variable cost and $6 goes towards paying the fixed cost. Now we did contribution, but hopefully the bakery is selling more than 1 cake. So let's review. Total fixed cost for the bakery is $600. Price is $10, variable cost is $4, and we already figured out the contribution per unit is $6. And as I said, hopefully they sell more than 1 cake. What happens if they sell 10 cakes? There's 2 methods to figure that out. Total contribution equals contribution per unit times numbers of units sold. So $6 times 10, $60. Easy, easy squeezy. Method 2 is total contribution equals total revenue minus total variable costs. So P times Q, price times quantity, minus variable cost times quantity. So price is 10, the quantity is 10, minus the variable cost is 4 times the quantity is 10. 10 times 10 is 100. 4 times 10 is 40. You subtract it, 60. It's the same number. That's the 2 ways to figure out total contribution. Let's practice what we just covered, okay? Practice 1. James sells jeans on the side of the road for $20 each. He buys them for $10 each. Every month he bribes a police officer to arrest any jean sellers near him. This is $200 a month. He also pays a helper $100 a month. Now you have 3 questions. 1. Calculate James' total fixed costs. 2. Calculate James' contribution per unit. And 3. Calculate the total contribution if James sells 25 pairs of jeans. Now what I want you to do is pause, work on these questions, and when you're done, unpause it. Okay, here we go. Let's take a look at question 1. Calculate James' total fixed cost. Well, the bribe is $200 a month, and the salaried staff's $100. So fixed cost just equals add the costs that don't change. So $200 plus $100 equals $300. Well, that was easy. Let's go to question 2. Calculate James' contribution per unit. Well, remember the price was $20 and the variable cost was $10, so contribution per unit is P minus VC, so it's price minus variable cost. That's $20 minus $10, so end up $10. That's the contribution per unit. Calculate James' total contribution if he sells 25 pairs of jeans. Remember, we got two methods of doing this. Method 1 is a long way. Total contribution equals total revenue minus total variable cost. So total revenue is price times quantity minus variable cost times quantity. And you see the numbers here. $250. Then method 2 is just total contribution equals contribution per unit times quantity sold. So $10 times 25, $250. Now, we go on to the next part. As we discovered with the bakery, selling 10 cakes just isn't going to do it. So let's read this. Sam's Bakery is losing money, selling only 10 cakes per month. They need to know how many they need to sell to not lose money. This is called the break-even quantity. And we can figure this out. Two methods. Method 1. Total fixed costs equals $600. Contribution per unit is $6. And we need these two pieces of data to fill in this equation here. Break-even quantity equals total fixed cost divided by contribution per unit. So $600 divided by 6, 100 units. So that means they have to sell 100 cakes in order not to lose money and not to make money. Break even. Method 2 is a little bit more complicated, but it's not hard. And it's based on this equation here. Total revenue equals total costs. What they're saying is that the money that they get from selling cakes equals their cost of producing the cakes, including the fixed costs and the variable costs. And we can do an equation to figure out the quantity needed, because total revenue equals price times quantity. So price equals total fixed costs plus total variable costs. And we can break that down a little bit more. We know, for example, the price is $10 and the Q, but we don't have the Q, that's what we're trying to figure out, equals total fixed costs, which is 600, plus the variable cost, which is 4 times Q. Well, that goes down to 10Q equals 600 plus 4Q. And we just solve for Q. We bring the 4Q over here, 6Q equals 600, and Q equals 100 units. Again, that means you're just figuring out how many units you have to sell in order for total revenue to equal total costs. Break-even revenue is related to break-even quantity. It's basically, instead of quantity, it's how much money do you have to get, how much money you have to make in sales in order to break even. So remember, the total fixed cost is 600, the contribution per unit is $6, and the price per unit is 10. And with that, we have two ways we can figure out the break-even revenue. Break-even revenue equals break-even quantity times price per unit. So we figured this out before, right? It was 100 units times 10, $1,000. So in order to break even and not lose money, the bakery has to sell $1,000 worth of cakes. Or they need a revenue of $1,000. The other way to figure this out is this equation here. Break-even revenue equals total fixed cost divided by contribution per unit times price per unit. You can see this here, $600 is total fixed cost divided by the contribution per unit, which is 6 times 10. That ends up being 100 times 10, which is 1,000. Same thing. So then again, they need an income of $1,000 in order to not lose money, to have a profit of 0. Talking about profit, you probably actually want to make a profit. I mean, coming up with 0 profit is still not good, right? So how do we calculate profit? We got a couple of methods. Let's review. The price is $10, fixed cost is $600, variable cost is 4, and contribution per unit 6. Profit if they sell 110 cakes. Let's figure this out. Method 1. Profit equals total contribution minus fixed cost. Well, total contribution, remember what that is, right? It's contribution per unit times Q, quantity. So 6 times 110 cakes is $610. Okay, so let's go back to the equation. Profit equals total contribution minus fixed cost. We just figured this out. Profit equals 660, we got that from here, minus the fixed cost, which is 600, equals $60. So if they sell 110 cakes, their profit is $60. Yay! And there's a second method to do this. Profit equals total revenue minus total cost. How do we figure total revenue? Total revenue equals price times quantity. So $10 times 110 cakes being sold is $1,100. Total cost is fixed cost plus total variable cost. The fixed cost was 600. The variable cost is total variable cost is variable cost times quantity, which is variable cost is $4 times 110, which is 440. So 600 plus 440 is 1,040. So remember the equation, profit equals total revenue minus total cost. So it's 1,100 minus 1,040, which is $60. The two ways to figure out profit. So let's go to practice 2. Billy sells chairs for $50 each. Her variable cost per chair is $30, and her fixed costs are $1,000 a month. What's Billy's break-even quantity? What is her break-even revenue? What is her profit if she sells 40 chairs? Pause, and then answer these questions, and then unpause, and then we'll see the answers. Okay, let's go. What's Billy's break-even quantity? Well, break-even quantity is total fixed cost divided by contribution per unit. So total fixed cost is 1,000. Contribution per unit is price minus variable cost. So 50 minus 30 is 20. Break-even quantity is 1,000 divided by 20, which equals 50. So she has to sell 50 chairs in order to break even. Let's go to question 2. What is her break-even revenue? Break-even revenue equals break-even quantity times price. So we know that break-even quantity is 50 and the price is $50, $2,500. What is her profit if she sells 40 chairs? Oh, wait a second. We said the break-even quantity was 50. I think she's going to have a problem. Profit equals total contribution minus total fixed cost. Total contribution is contribution per unit times Q. And then we take away the total fixed cost. So contribution per unit is 20. The quantity is 40 minus 1,000. So that's total contribution is $800 minus 1,000, the total fixed cost. Her profit is minus $200. That's not good. I hope this video helped. Take care.